So, what's the real difference between a truly great investor and someone who just got lucky? It's one of the biggest questions in finance, and today we're diving into a genuine mystery. Where in the world did all the investment alpha go? To get to the bottom of this, we've got to start with a really fundamental question. In the crazy world of finance, what actually is true skill? I mean, how do you tell if an investment manager is a genius or if they just happen to be in the right place at the right time? Well, the answer is a concept called alpha. And honestly, the best way to think about it is like this. Imagine a world-class chef. They can take totally ordinary ingredients, stuff you or I could buy at the store. And with their pure skill, their secret recipe, they create something extraordinary, a Michelin star meal. That extra bit of magic, the part that goes way beyond just the ingredients, that's alpha. And the ingredients themselves? Well, that's what we call beta. Beta is basically the return you get just for showing up. You buy some stocks, the market goes up, you make some money. Pretty simple. Anyone can get beta. It's just the raw material. So you can see why serious investors aren't just looking for the raw ingredients. No, they're on the hunt for those master chefs, the ones who can cook up some real alpha. But here's the catch. Finding these top-tier managers, it's incredibly difficult. And this is where a whole industry popped up to solve that exact problem. Funds of hedge funds. You can think of them as master curators. Their entire job is to go out, find the most brilliant chefs on the planet, and build a dream team portfolio for you. Sounds pretty great, right? Well, of course, this service comes with a price, usually an extra layer of fees.
And for a long time, this model seemed to work just fine. But then, a groundbreaking academic study decided to pop the hood and see what was really going on. They analyzed thousands of these so-called master curators over one of the most dramatic periods in financial history. And what they found, well, it was startling.
The way they did it was really smart. They broke their investigation down into a three-act play. Act 1, the good times, before the storm. Act 2, the absolute chaos of the 2008 financial crisis. And Act 3, the aftermath, when everyone was picking up the pieces. This structure gives us an incredible window into what really happened. All right, let's start with Act 1, the good times. Before everything went sideways, the world looked pretty rosy. The master curators looked like geniuses, they were definitely earning their fees, and investors, well, they were enjoying a true feast of alpha. And get this, the numbers were incredible. From 2005 to mid-2007, the average fund of hedge funds delivered a statistically significant 5.28% in pure alpha, annually. This wasn't just the market going up, this was that secret recipe, delivered consistently. I mean, it really felt like a golden age. The whole system was working exactly as advertised. The curators found the chefs cooked up the alpha, and investors got the extra return they paid for. Everyone was happy. But then, everything changed. And that brings us to Act 2, the catastrophe. When the 2008 crisis hit, this wasn't just a burnt meal. This was a fire that ripped through the entire kitchen. In 2008 alone, the average fund of hedge funds in this study lost a devastating 24.7%. The feast was officially over.
And look, we're not just talking about paper losses. We're talking about real businesses failing. In that single year, 603 of the funds in the study's sample, gone. They just liquidated and shut their doors forever.
The scale of the damage here was just immense. Nearly a third of the funds that were around at the start of the year did not make it to the end. A massive portion of the industry just vanished into thin air.
So what happened to the ones that survived? Well, this is where the researchers looked at the post-crisis landscape and made their most shocking discovery. Alpha itself had become an endangered species.
And this just begs the question, right? What about the truly elite funds? The ones that had consistently proven their skill before all this chaos? Surely the best of the best, the true master chefs, would have navigated the storm and kept producing that alpha, right?
Well, the study's conclusion here is just stunning. A similar study from before this period found that about 22% of funds were legitimate alpha producers. But between 2005 and 2010, the period this study covered, that number completely collapsed, down to just 2%.
Let that sink in. The population of genuine, skilled investors, our master chefs, had shrunk by over 90%. The very thing investors were paying all those extra fees for had all but disappeared from the ecosystem. So we've got a real mystery on our hands. Alpha vanished. The final part of this investigation was all about finding the clues. How could this happen on such a massive scale? The study pointed to a few key culprits. First, there was simply too much money pouring in, chasing too few good opportunities. But the real killer? It was the sheer panic of the crisis. Investors rushed for the exits, all demanding their money back at once. To meet these demands, funds were forced to sell their best, most liquid investments, and this just created a death spiral. It exposed a fundamental flaw in their business model. They had promised investors they could get their cash out easily, but their own investments were often locked up and hard to sell.
So the crucial takeaway is this. The disappearance of alpha wasn't just about managers making a few bad bets. It was systemic. The very structure of the fund-of-funds industry, with its liquidity promises and layers of fees, proved to be incredibly fragile when it was put to the ultimate stress test.
And I love how the authors of the study put it themselves. They said that these have alpha funds may have become an endangered species. But, and this is key, some have survived. So skill wasn't completely extinct, but it was now extraordinarily rare.
And that leaves us all with a pretty provocative thought. This story showed how quickly a crisis can expose the difference between real skill and just riding the market. And it really forces us to ask, in today's complex market, is that difficult and expensive hunt for true alpha still worth it?